Today's topic is how to assess risk when starting a new business or with your existing business that you're building. What prompted this was I was talking to my son this morning, ironically enough, about gambling odds and trading odds. My background in the past was a trader, and ironically enough, the gambling was something I've read along the lines, but it applies to the trading, and I read a lot of gambling books, just to get an idea of how to properly assess trading risk. I know it was kind of off topic with him, but I was trying to explain to him the concept of taking multiple small losses to find for the big wins necessarily. So in regards to trading, you are trying to basically catch a trend in the market. That was the type of trader I was. I know there's flow traders who basically try to make a point on the flows coming in, which was ultimately, for the longest time, the dirty secret on most major trading floors, is that a lot of these traders were extremely fast at taking a point here and a point there, which doesn't sound like a lot, but if you have flows in the currency market, for instance, of $200 or $300 million a day, suddenly you're making $35,000 a day for your bank pretty quickly, and you get a bonus, etc. And it's a pretty stable business, and you count on a trading career 10 years or longer, which is quite rare. So you don't blame the traders for doing that, although it is tiring over time. So ultimately assessing risk. And then we're talking about casino odds and blackjack, and I had to explain to him how the roulette table works, because he was familiar with that, and how those two green circles lower the odds. So long term, if you just bet black or something the whole time, you're going to lose in the long run. And then in the meantime, however, you could have a run of 10 trades or so and make a lot of money. The smart thing, of course, there is to get out, or you get busted in 10 moves or so based on your betting size. So I was looking at longer term trend following traders, and what they'll do is bet 0.5 to 1% of their capital each trade, because the assumption is they're going to have to take multiple small losses in order to make a gain, which is difficult for people to do. I'm going to tie this into businesses in a minute. So ultimately what you do is you're trying to catch a turn in the market, for instance, and ultimately the market moves, but then you get stopped out. Even though if the trend goes in your favor, then there's one day spike and suddenly you're down for the day. Yes, it's raining. And suddenly you're down for the day, and the trade is out. So you actually caught a winner, but then you get stopped out. So the key there is you make a new decision about whether or not you're going to re-enter, although there is a secondary trading analogy there where you don't try to beat the market. So you have to make a decision based on your rules and your trend following trading, whether or not what you thought was right in the first place is actually right. And that's a whole different ballgame. Now, how does this apply to business? Well, partly I can base some of my experiences and observations. You're going to fail. You're going to start businesses that don't work. If you're really lucky, the first 1 or 2 businesses really work. But the key is to keep it cheap. So Facebook's a prime example. I don't know his whole past prior to Facebook, but Zuckerberg basically had to take off right from the start. Did make money for a few years, you may have noticed. He had to have funding, but ultimately you can see how there was a great idea building out of that. But that's a rarity, and those people, that's why they make the newspapers. Google is another example. That was a project that took off, and they maintained it. You may notice that they're trying to start all these other businesses, and none of them have the great financial success that the Google did. Ironically, some of them, I imagine, were $1 million businesses they were able to fund, and all 4 of them. And they're actually in an area of the world, the whole computer tech industry, where there's untold opportunities. And the real estate markets in San Francisco, etc., reflect that. But the bottom line is, when their business model took off, they had made small bets I'm pretty sure that they got funded right away and they had access to old servers and the blow-ups in Silicon Valley. But they took a small bet. And I imagine if they continued, rather than going to academia, I think that was part of their plan. If they continued, they would have taken other small bets to start businesses. And that's the key. I missed a mistake. Oh, broken tree. I made the mistake of taking a couple of big bets when I was starting my first couple of businesses and lost the money. So consequently, I have a business loss I get to write off in the future. I've been smart. I would have taken small bets and taking my hits. That falls under live and learn.
That's going to be painful.
I know.
Wow.
Holy cow, big tree. So, like poker, we take multiple small bets in order to find a win. I've even watched professional poker players in tournaments end up having to leave the game because they're not allowed to add capital in some of those, but they might have 20 bad hands in a row. Not unusual in that game. How many trees fell down here? What's that tree? Ultimately, so they can take 20 bad hands in a row and then they're out. And these are multi-million-dollar poker players. And you see multiple businessmen, a lot of business entrepreneur types, they talk about the first 5 or 7 businesses not making it. Now granted, some of these businesses die at the kitchen table when you're talking about them, but that's the narrative, right? You have to be prepared to fail. And ultimately, if you accept those odds and be prepared to fail, then you have to make sure that you can afford to continue to play. And the way to afford to continue to play is either not use your own money or make extremely small bets so you can afford to lose. And then, unfortunately, that goes against human nature primarily. There are some people who thrive on that, but the rest of us have to mentally prepare themselves for those small losses and be prepared for them. I am, but I would tell you, all the crap you have to deal with in getting a business going, so even if it does take off, it's not a fun job. But after one quote I heard from about Richard Branson years ago where he said, look, having your own business or an entrepreneur is a lifestyle. You don't have to fight the 9 to 5. This is my part. This is my take on it. So you don't have to fight to get to work in the morning for 9 a.m. or 8 a.m. and leave at the same time as everyone else. But you have a lot of other things to deal with. Near bankruptcy. As far as I know about Branson, he borrowed against his family home over the years 3 or 4 times. And this was a guy who his business was actually his first business did pretty well, and so did the second one. But even he had trials that he had to go through. So that's the next step. But that'll be another topic: is what happens when your business is doing well, and then you have to deal with the crisis. But anyhow, that's my point. If you're going to do this lifestyle, be an entrepreneur, you have to assume that you're going to take a lot of losses. And how are you going to handle that, risk-wise, etc.? That's it.